US President Donald Trump imposed a 100% tariff on China from November 1st. He has also threatened to cancel his in-person meeting with Chinese President Xi Jinping at the APEC summit later this month. Now, the fears of a global disruption in trade sent Wall Street stocks tumbling, wiping out $1.65 trillion in market value. Well, Trump's threats were in response to Beijing's silent retaliation to US tech policies. Apart from unprecedented export license requirement for rare earth minerals, China hit US-owned vessels docking in the country with new port fees. Now, that is a tit-for-tat move and in response to US semiconductor shipment ban. The Friday rout in markets started after Trump's social media post of massive tariff hike in retaliation to China's rare earth export license requirement. Now, Trump acknowledged that he could retreat from his massive tariff escalation if the Chinese back down from threatened restrictions on rare earths. He also said it was still possible that he could meet Xi later this month.
No, I haven't canceled, but I don't know that we're going to have it. But I'm going to be there regardless, so I would assume we might have it. But, you know, they hit the world with something that really is not anything that people are going to do. And it was shocking.
US stocks suffered their worst sell-off in 6 months. The S&P 500 wiped out its weekly advance after tumbling 2.7%, which is its worst day since April 10th, when the tariff-induced sell-off rattled financial markets. 10 of the 11 sectors in the S&P 500 traded lower, led by declines in technology shares. The tech-heavy Nasdaq 100 sank 3.5%. Now, a basket of the so-called Magnificent Seven companies plunged 3.8%, led by losses in Tesla and Amazon.com, while Nvidia slid nearly 5%. Wall Street's chief fear gauge, VIX, topped 20 for the first time since April. The only sector that surged was rare earth, with stocks skyrocketing. Now, crypto prices tumbled after Trump's tariff hike, with around $300 billion wiped out from market value. Traders saw about $20 billion liquidated in less than 24 hours, and that marked the largest liquidation on record. Bitcoin fell more than 12% to trade below $113,000 after hitting an all-time high of above $125,000 earlier in the week. Soybean futures plunged, extending earlier losses. Trump's social media post contributed to dimming hopes for a US-China trade deal that could restart stalled American soybean exports. Growers are busy harvesting while their top export market remains shut. Chicago soybean futures fell as much as 2% to around $10 a bushel, hitting sessions low after Trump's social media posts. Cotton futures fell to the lowest since April as the renewed threat against China, a major cotton buyer, will further hit demand. Other commodities from wheat to copper and oil also dropped after the president's comments. Meanwhile, oil prices clashed to the lowest since May as tensions ease in West Asia. Global supply surplus concerns underpinned bearish gloom. U.S. crude prices slumped 4.2% to settle below $60 a barrel. Crude was under pressure even before the U.S.-China trade war rhetoric. Trump was already chest-thumping on lower oil prices.
You know, prices have come way down. We've gotten prices way down for groceries, for oil especially. Today we broke $60 a barrel. We think the oil is going to be under $2 a gallon very soon. That's about 70% lower than what it was just a year ago. So that's a big thing. And when the oil comes down, everything comes down. It's pretty beautiful to watch.
Well, separately, apart from the tariff threat, in just 24 hours, the Trump administration hit China from two completely different angles. First, proposing to ban Chinese airlines from flying over Russia, and second, slapping sanctions on Chinese refineries and oil terminals for buying Iranian oil. Now, for more on this, joining us from Kuala Lumpur is Collins Chong Yu Keat. He is a foreign affairs and security strategist from University of Malay. Thank you so much, Mr. Keat, for joining us on the broadcast.
Thank you, Diksha.
Mr. Keat, US President Donald Trump has announced plans to impose an additional 100% tariff on Chinese imports starting next month. And he's also hinted at withdrawing from his upcoming meeting with the President Xi Jinping, on which we've already seen sort of a U-turn. Now, having said that, how do you interpret this latest move?
It's a tit-for-tat measure. Trump sees that, Xi has, stabbed Trump in the back. For the past couple of months now, we have seen how things have been going quite positively. And with the recent move by Beijing to increase, exponentially the curb on the export on rare earths and other critical minerals. So this has also caused concerns among not only U.S. allies, but also, of course, also among independent nations throughout the world, especially in the region. So we can see that Trump is right when he said that there's a lot of these measures in place by the U.S. Having more of these chips and cars in terms of these economic advantages against Beijing, and this is also being used as a greater bargaining chips by Trump as to whether to have this meeting with Xi in South Korea and APEC early next month or end of the month. So we can see that this is a clever move to increase the pressure. So now the ball is on the court of Beijing, and the resilience of the U.S. economy is underappreciated. Has largely been ignored now by the world. So Trump has his full cards now in terms of having this, not only the tariff measure, but also the ability to get the support of different nations who are now deeply concerned by Beijing's move to curb the export of these critical minerals. So having this advantage of the ability to synergize, to pool the efforts of these nations who have been wanting and waiting for this supply of these critical minerals, and of course I foresee that Trump has the upper hand here to get the support from other nations, and the ability of the U.S. economy itself under Trump to have this prolonged or protracted economic rivalry with Beijing in the long run. Diksha.
Right, and having said that, while we know that it is a tit-for-tat move, the markets have reacted sharply. China, of course, continues to dominate the supply of rare earths and also other critical minerals. And the last time that Beijing tightened export controls, it did send shockwaves through U.S. industries. Now, how do you see this escalation shaping the economic dynamic between the two countries in the coming months?
Well, we have seen how, with Trump in place now, he has put in place a string of measures to revive the U.S. economy, of course, to get all the manufacturing and jobs and companies to return to the U.S. And we have seen now with this controlled inflation now and the reduction of prices, and of course also the ability to increase wages. And then all these are, all these serve as the main fundamental options that the U.S. has in terms of having this prolonged rivalry with China. And Trump is right again when he said that China is in deep reliance on the U.S. in terms of market. So if the U.S. increases the tariff measures on Beijing, so the real impact, the negative repercussions will be mainly on Beijing. So this is the advantage that I've seen, and also we have seen how high public debt ratio of China now. We have seen it's almost 300%. It's very high for a developing nation. And of course, also in terms of decades of public infrastructure boom, returns are diminishing. This exodus of capital or resources out of China. We have also seen the demographic disadvantages of China. So vis-a-vis the U.S., I foresee that Washington still has the upper hand, especially under Trump's measures.
Of course, Mr. Keith, negotiations may still be on the horizon, though who leads them and where they take place remains to be seen. And we'll leave it there for now. Thank you so much for joining us on the broadcast and sharing your insights with us.
Thank you, Diksha.